Today I'm going for a stock market. I do regularly stock market buying stock selling. So I'm thinking to create video how what to looks for buying video and which stocks is good to buy. And so when I checking a lot of stocks and I find that Google is this time to good to buy. So if you see here, price of Google is for last 52 weeks is in lowest almost and high was 3000. Day range is also from 2k to 2.3k, 2.2k to 3k, and it has highest EPS and PE ratio is high, and short interest is good. Market cap is 1.4 trillion. Okay, so if you see basically Wall Street rating is strong buy, and SA author rating is also buy, and quant rating is buy. So I always look for quant rating whether we need to buy or not. Then I look for analytics. So these are few people are saying Alphabet is good to buy and it can reach easily 3000. Google is solving. So now for rating earning wise, I would look here uh, quarterly. So if you see quarterly absolute value or year to year growth, so all number is almost 20%. So recently is 22% of revenue and 22% is total revenue, and gross profit is 23%, and selling general admin expenses operating incomes all looks like 20% is growing. So basically this company is growing year to year 20%. So ideally it's good. And so the recent quarter result is on 26 April. So the EPS is almost is quite less than $1 they miss, but it's good. And revenue is like 68 billions. And also they don't pay the dividends. So it's and valuation is in terms of I would like to see the valuation is D grades. So valuation is that means very high. Growth is also lower, it's not that much growing, but profitable is very high profitable company. So that's why I looks here this terms of profitability. Momentum is also good. Peer rating if we see, so I usually looks peer rating. Facebook is not good time to buy. Tessie also not good to buy, and Snapped also not good to buy. Baidu also not doing good, and all those peer rating is not good. So in terms of growth and trading, okay. So and also I can see total return. Google last 1 month minus 10%, last 3 months it minus 13%, last 6 months it minus 20%, last 9 months is 15%. So all are negative, but I think 1 year is 3%, but average all companies down like 30%. And 3 year return is also 100%, and 5 year return 150%. So this is very growing stocks, but it's not grow as much like in 5 year it can be 5 times. No, in 5 years I think it will be double or 3 times maximum. And so if you see the graph also here in trading view, this also like when COVID came and it reached lowest here despite 23 March 2020 is like 1000s, then it reached highest like 3000s, and now it's come almost 2000s. So it's a good find. Usually I feel it's good to buy. And so these are parameters and few people's what they are saying. Let's look into. So their summary: Alphabet, this is 3000 stocks. Alphabet will continue to be great business while number of companies similar to caliber to trouble post COVID. Google search continued to dominate space of unbreakable moat. So TP valuation suggests the share could be revisit 3000 when the market worked through the macro holdings. Okay, so there are summary. So why he's saying like why the alphabet is three, because before the discuss valuation, I think important to understand why alphabet will continue to grow business while number of companies similar caliber seeking trouble in post-COVID environment. Many investors think Google along the other FANG. So FANG is a group of Facebook, Amazon, Netflix, Google, and alphabets. So, okay, so but the negative price reaction company Meta, Netflix, Amazon has given investor to painful lesson to corporate fundamental are dynamic rather than statics. For example, Meta is grappling Apple iOS privacy changes and burning through the billion of cash building a metaverse. Netflix is losing subscription, trying back to pay more the sharing the brother password. Amazon has much warehouse capacity as e-commerce demand slow and margin has been crushed inflation. So what the makes Google different from the names? The simple answer is Alphabet's core business is search advertisement is highly visible position in Google and literally to gateway to internet's modern daily utility. Along with billion internet users spend hours of their PC and smartphone every day, Google play the important roles to collecting those data. So what about Apple iOS updates? Such advertising belong to the bottom part of market funnel. Therefore, the conversation usually take place of Google on proportions such as Chrome, the foot of Google safe position to Alphabet privacy, the cuts of the signal. Means Google has on the search engine and using that search engine as well as they have the browser. So browser have all the history. So okay, why Alphabet? So I think Alphabet is good to buy. And conclusion, Alphabet won the brokerage to ultra low interest environment where any retail investor could be buying near the bankruptcy and triple the investment in a week. Okay, and the few comment if I see the user if have no comment. So I think good to buy. Thank you for watching.